So with tax season currently right upon us, basically I'm making this video right around February, and obviously taxes are due about 2 months from now, but many people are already starting to do taxes. I figured it'd be really cool to maybe just make a video talking about several ways you can potentially look to reduce taxes. There are so many ways to reduce your taxes, so even if you've seen another video about this, hopefully this gives you maybe some even more ways that you can potentially look into, and we're gonna put timestamps on the bottom. So with that being said, let's just get this video started. But as always, you guys know the same drill. Like, comment, subscribe, hit the bell notification if you guys enjoy videos like this. Alright, with that being said, let's get rolling. So before we get into the several ways, strategies, and methods that you can use to reduce your taxes, and again, I talk with some personal anecdotes because the big idea is that I've used most of these methods to pay very little in tax every single year after year, so they're all from personal experiences. But I think it's really important to maybe understand the difference between a credit and a deduction. So the big idea really, and again, if you know this, you can skip in the timestamps and jump around, but I do recommend every minute because we're going to go into in very big details. But the biggest difference really is that a deduction is really when you are finding a way how to reduce the actual physical income that's being taxed. A tax cut, or simply put as a tax credit, is when you actually reduce the amount of the actual physical tax itself. So a good example of this is, let's say for example you currently make about 40K off of the job that you're currently working. A deduction is going to be able to reduce the amount that you are physically being taxed on. So now instead, maybe a $10,000 deduction means that you're only paying about $30,000 of income worth of taxes. So you're still paying a lot less, but you're basically calculating your tax off of a $30,000 income. Now, a tax cut, or simply put is a tax credit, is simply when you actually reduce the actual tax amount of money. So for example, if you're currently making $40,000 every single year, and let's say for example you lost $15,000 to taxes, so in the end now you're paying $25,000 as your current income, then what happens is that your tax credit is going to reduce that $15,000. So instead of having to pay $15,000 worth of taxes, you might only now have to pay 10. Which one is typically better? It just really depends on the specific circumstance. Both of them are going to be really helpful, but I'd probably say in most situations it's better to just reduce the actual tax income amount that you're taxed, just because it's a bigger number. So in other words, in our example, it's better to just reduce the $40,000 to begin with than the $15,000 of the actual physical amount of the tax that you're paying. So now onto the actual strategies to reduce your taxes. So the first way that you can look into potentially reducing your taxes is something called a capital loss, which is really about trying to sell stocks or investments that you actually lost money on. This is actually especially very common in the last 2 years, because in the last 2 years, in 2021 and 2022, we had a pretty horrible stock market that was going on, and so most people lost a lot of money, or certainly some level of money. There were a few people I knew that actually timed their puts very specifically, so they actually made some money, but for the overwhelming majority of people, they actually lost money. So the big idea is that if you're able to sell those particular stocks at a loss, you can reduce about up to $3,000 worth of income inside. There is a specific form that you can get from your brokerage account. I believe it's called, here, actually I'm going to look it up really quick. It's called the 1099B, and it's really in order to track the losses that you had inside of your brokerage account. Now, there is also a thing, just, if you hold on to a stock for over 1 year, you're still going to be taxed on it, but it's a way to reduce your taxes, because by holding a stock for longer than a year, it now becomes a long-term capital gain tax. And so what happens is that now you're taxed at a smaller rate or a lower rate than if you tried to sell your stock within less than a year of holding that particular stock. Now, the second strategy to be able to reduce your taxes is for anyone that might enjoy blackjack, poker, or gambling at the casino, but it's really about reporting your gambling losses. There is a form called the W2G, and you can get that form typically from the casino that you gamble with. And if you lost money at the casino, which, let's be honest, sadly the truth is that most people will lose money off of the casino, but if you did make money off of the casino, huge congrats. But for people that might have lost money at the casino, casino, this is a way you can actually potentially claim less taxes, so you pay a lot less. Therefore, you are also going to be able to save a lot of money through this particular method. Now, the third way to reduce your taxes, and this is definitely the strategy that I use the most and my favorite way of every way that you're going to be hearing in today's video, but of course, we try to provide variety in case depending on everyone's circumstance, but it's really going to be writing off your expenses for anyone that happens to be either self-employed or had a side hustle of some kind. We've made a lot of videos that talk about side hustles you can potentially pursue, so if you're brand new here, definitely highly recommend checking that out. I'll put it at the very, very end screen. But the big idea is that if you are someone that had a side hustle of some kind, even if you only made $1 from it, as long as you made $1, even if it's something as simple as selling something on eBay, you can actually write off expenses off of whatever amount of money you actually made. So now, instead of paying taxes on the amount of money you made, you actually get to pay taxes on the amount of money you make minus the amount of money you spend. And one of the biggest tricks that I think not a lot of people actually talk about is that it's very, very possible that because not every business actually makes a profit the first couple of X period of time, it's actually even possible to reduce your taxes by writing down almost zero income or even a net loss actually. That's how a lot of people are able to reduce their taxes to almost nothing actually, because if you're able to write off enough expenses and spend enough money, you can write off. So try to look at so that on paper it looks as if you literally made more money. So for example, let's say for example you run a content creation, let's say you run a blog, right? You run a blog business where you write articles and stuff. Let's say, for example, in 1 year you generated $40,000 off of that. There's so many creative ways, and you can use a Schedule C, so the form is called a Schedule C. You can use that in order to write off almost everything that you spend as long as it has some relationship to the business. You can write off your laptop, you can write off your travel expense. Say, for example, you made $40,000. You can do minus the $1,000 for the laptop, minus $600 for hard drive, minus a certain amount of money for your vacation. Not vacation, but you're going to claim it's your vacation, but you're going to claim it's not your vacation because you're using it as a business expense. So you're going to write off $2,000 for that trip you took to the Bahamas if you wrote an article related to you traveling to the Bahamas in your blog, and you're just going to write off all sorts of different expenses. If you can find a creative way to write it off so that you basically show on paper that you are basically making almost no money out there, so basically $0, even though some of this might actually be stuff that you were planning to buy anyway, then you can reduce your taxes quite significantly actually. And that's why I say this is probably my favorite way, because it's one of the most controllable ways that you have to reduce your particular amount of taxes. And again, keep in mind there are so many creative ways to do this. You can even write off things such as seminars, classes, personal development related stuff in order to help build up your business, all sorts of things. It counts and it's fair game in terms of writing down your expenses. Now, the next way and strategy to really be able to reduce your taxes is going to be through a retirement account. So if you contribute, this is really straightforward, but essentially the idea is that you have a 401k and you have a Roth IRA. If you're able to take money and contribute to your retirement account, that amount of money you don't have to pay taxes on yet. So you do have to still pay taxes off of like the income you made, like, before you contribute to a Roth IRA, you still have to pay some tax on it, but it's just more about whether you pay taxes ahead of time or afterwards. But the big idea is that the amount that you pay in taxes is a lot less than what would be in off of things such as like your income tax. And I think that's one of the really cool things about it. Another big idea is that you can also do something called donation. This is maybe a bonus way, because this is not necessarily a way to reduce, or it is a way to reduce your taxes, but not necessarily put more money in your pocket, but it's simply put as a way that you can give back to the world, or just give back to a particular cause that you might care about, and then use that to reduce the amount of taxes. You're not going to save as much money because you're giving money away at the end of the day, but it is still maybe something that if you really particularly care about a particular cause, it can be a really cool way to still help to reduce the amount of taxes that you owe, especially since at the end of the day, if you'd rather give that money to a cause than give it to the government, assuming that you don't necessarily always support a lot of the things that the government do. Nothing against the government, but just saying objectively from what I've observed from a lot of other people. And then the last strategy that we're really going to share is if you really want to reduce taxes, is to just see, and this one's a little bit more niche, so it doesn't apply to every single person, but if you work for a public company, sometimes certain public companies can give you payment in the form of stock options. So instead of getting paid off of income, you can potentially try to see if it's possible to request stock options as a way of payment. This is not very particularly common among the average person. It's very common among the rich people. It's not as common among regular non-rich people, but at the end of the day, if it's possible, it is still an option. And I figured it's important to just be able to share to give as many options. So that being said, this covers hopefully several ways that you can reduce your taxes. There are so many ways that you can reduce your taxes, but these are just the main principal ones I think will be able to apply to the most number of people out there, especially again with Schedule C and expenses and stuff like that. But as always, feel free to comment if there's another creative way that you might have on reducing your taxes, or really about anything at all, down in the comments below. So that being said, thank you guys so much for watching. As always, stay safe, stay well. Remember to smash the like button, comment, subscribe, hit the bell, and hope to see you guys next time. Thank you guys so much again.